3 months, 4 months into the job. I want to get a sense from you, Alexander, in terms of, have we got to the end of the revamping the product range first of all?
Good morning, and thank you for having me. I mean, Pandora has actually been on a decline for a few years. So we're kind of in the beginning of the turnaround. So there's still a lot of work ahead of us.
And in terms of the guidance that you've given to the market this morning, yeah, you're still sticking with a full-year EBIT margin of 26 to 28%. Full-year organic revenue will contract by 3 to 7%. If I said to you, are these conservative estimates, or could they potentially slip from these? How confident are you on this guidance to the market?
I mean, we've announced back in Q1 that this year was going to be tough up to the point of the brand relaunch, which we're entering now. So the first half was negative 10% like for like, which is really the important number here if we think about the offtake that we're generating. Of course, we are maintaining the guidance as we laid out in the beginning of the year. So there is some belief that the impact of the relaunch is going to have some positive signs to it. Early days, though.
Okay, it is early days, and I suppose you're trying to put your own stamp on it. What's the biggest change that you want to put into play? If you come back to me and talk to Nara and myself at Christmas time, what's going to be the biggest piece of transformation that I can say you initiated?
I mean, first of all, it's going to be a team effort, but what my focus is squarely on driving brand relevance back. I think this company has spent the last few years of trying to become a world-class retailer, and as a function of that, all the effort has gone against that. And I think also then that meant that we've slipped a little bit of our closeness to the consumer. So we lost some relevance. We know that. That's a fact. So if you speak to me in a few years from now and ask me if I was successful, the answer would be brand relevance.
Okay, brand relevance. To become more brand relevant, you need to engage with your public. You committed to significantly increasing the marketing spend in China, actually. So what have you spent this quarter, and where does it go going forward?
I mean, so if you look at it from a global standpoint, we spend roughly 10% of our revenue back in marketing. In the early days, I think this business was very much propelled by the uniqueness of the product platform. As that's waned a little bit, and also that we've lost a little bit of the relevance, the likelihood of us having to spend a little bit more in marketing going forward is high. So I think in the back half, we'll actually be upping our media investment. Sorry.
Okay, but by approximately how much? Let's get a dollar value. How much?
I mean, we talk in percentage terms, I think is more realistic. So we'll be spending roughly 30–40% more in the back half than the comparative from last year. And that is a significant amount.
Okay, you're a perfect CEO to have. Two of your biggest markets are the US and China. Have you seen, I know you talk about the difficulty in turning the company and the product relevance around to me. Talk to me about the China market. If I was to say to you, what slowdown have you seen in China in discretionary spending? What can you tell me?
I mean, we have actually had a quite positive journey in China in the last few years. We've seen a positive organic growth of 10% this first half. With a like-for-like that's been slightly negative. We, as many others, are feeling that the traffic into stores are declining somewhat, whereas online, actually, our business is on fire. I think the first 6 months we're up 54% on the online business, specifically on Tmall, where we're spending most of the energy right now. So from that standpoint, I think we're still a quite young brand in China, so we still have a long way forward. So very much contrasted to US, where we're much more of a mature entity.
You have used the word relevance twice in this interview to me. I walked past your store in, I think it's in the King's Road last week or whatever. I just wonder, you've done a deal with Warner Brothers, you have your deal with Disney. So let me just ask you a little bit, do you damage the brand of Pandora, which you're trying to make more relevant and perhaps upscale, by doing these co-brands with Warner and Disney, or is the volume just too hard to give up?
No, I mean, first of all, we have to put it in perspective. If our collaborations would amount to more than half of the business, let's say, then of course these collaborations and those equities take over the brand. That's not the case. We look at maybe less than 5% of the total turnover coming out of these collaborations. I would see them as adding spice and interest to the brand, but the core of our business still remains the jewelry that we design and produce ourselves.